Hello everyone, PS from PS Invest Plays here today. Nike is the largest sportswear brand in the world. Its enormous size, intertwined with its state-of-the-art brand recognition and customer loyalty, has led to a strong economic moat. Since March 2020, Nike's stock price has outperformed the S&P 500 by returning 144% versus 96% of S&P 500. This has led many analysts to suggest that the Nike stock price is overvalued. In August, its stock shed 5%. Is this trend going to continue, or we can expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, review its charts using Elliot wave theory to see how we can make money. So stick around. I think you will like what I have in store for you today. Nike, ticker NKE. Nike is an American multinational corporation that is engaged in the design, development, manufacturing, and worldwide marketing and sales of footwear, apparel, equipment, accessories, and services. The company is headquartered near Beaverton, Oregon, in the Portland metropolitan area. It is the largest sportswear brand in the world by a long shot. Nike's classic swoosh logo and trademarked slogan, "Just Do It," are widely recognized around the globe and have attracted superstars like Michael Jordan and Serena Williams. Nike spent 2020 accelerating its consumer direct offense, a plan to get closer to its customers by eliminating the middleman and leveraging e-commerce. This strategy strengthened Nike's brand identity, which is key to maintaining growth. Nike has continued to succeed on the digital front as consumers accelerated the shift to online environments for the purchase of goods and services. Digital revenues for the Nike brand increased 41% year over year from 2020, with Nike Digital accounting for 21% of Nike brand revenues. Digital sales were up 54%, 40%, and 50% in the North America, EMEA, and APLA regions, respectively. Despite the reopening of stores, Nike continues to realize booming digital sales trends, which is an attribution to the strong investments Nike has made in recent years to improve its digital footprint. Although the lion's share of Nike's total revenue currently comes from its North America segment, Nike continues to observe robust growth internationally. On average, Nike has experienced growth of 10%, 18%, and 3% in the EMEA, Greater China, and APLA regions over the past 5 years, respectively. Given Nike's brand recognition and supply chain mobility, international growth is sure to continue in a positive trend moving forward. Nike has an excellent management team, which is often measured via return on equity. Nike's 3 and 5-year average ROE are 41% and 34% respectively, compared to the S&P 500's long-term average of 14%. This is a good way to see how a company's management team is utilizing the capital that shareholders have invested. Although many people are loyal to Nike purely based off the quality of its products, Nike's membership program is a loyalty scheme that keeps customers closer and more engaged. Through exclusivity, community, personalization, and omni-channel experience, Nike continues to strengthen its already loyal customer base. I think most investors and analysts are failing to recognize and mentioned the enormous opportunity Nike will have going forward in the NFT, non-fungible token space. The idea of virtual collectibles through NFT has found its way into the sneaker world, which Nike just so happens to be a large player in. Sneaker lovers already possess the qualities of collectors and traders, so sneaker NFTs could be easily ingrained into their culture. In 2019, Nike was granted a patent for CryptoKicks, a system for releasing digital footwear that could connect the sale of physical shoes with virtual versions. Nike has not commented on its plans in the NFT space up to this point. However, the company is surely a prime candidate to benefit from the area moving forward. Let's look at some of the risks that Nike has. In the final quarter of 2021, Nike experienced adverse market dynamics in China, as Chinese celebrities boycotted and discontinued contracts with global brands as a result of media controversies over forced labor in China. Ongoing issues between China and the sports brand could significantly impact Nike's growth prospects. As of 2021, China was Nike's fastest growing international segment, 18% growth, accounting for $8.3 billion in total sales. For FY 2022, Nike predicts operating expense growth to be slightly higher than revenue growth, largely due to increased spending involving sporting events and store openings. Nike provided guidance through FY 2025, estimating that selling, general and administrative (SG&A) expenses will be between 32 to 33% of revenue on average. Higher SG&A expenses would result in lower margins. Looking at the financials for Nike, revenue, gross profit, EBITDA, net income, and earnings per share (EPS) are excellent. Nike dividend for its common shares now stands at 2.75 cents per share quarterly, or $1.10 per year. At its current price, that amounts to a cash return of 0.67%. To put the payout into perspective, the average dividend yield for the S&P 500 is 1.3%. Nike has been paying dividends since 1987 and is also increasing them yearly. It did not cut its dividend in 2020, which is remarkable. Nike also boasts an ongoing 4-year program, $15 billion stock purchase or stock buyback program that it initiated in 2018. As of May, it had retired $4.7 billion worth of shares under the program. In the chart on the left, free cash flow FCF currently stands at $3.70 per share. It is the highest in the last 15 years. If we look at stock price to FCF ratio, it is trending towards the historical value, which tells me that the stock is not expensive. Many analysts continue to suggest that Nike's stock is overvalued. I disagree with this notion. When looking at Nike's individual history, Nike has always traded at a premium in past years compared to its peers, which I believe is warranted given the company's business model and strong financial performance. Nike is a rare case of a very mature company that still has plenty of room for future growth. The company's success will only accelerate moving forward. Considering the earnings multiple over the past 5 years and growth potential, the company's valuation becomes far more reasonable, thus emphasizing the importance of a long-term approach. This is also indicative in the charts, where I see the stock price to increase considerably in the next 4 to 6 years. Now let's look at the charts for Nike. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. The bull wave that started way back in 1990s for Nike is still not over. It has completed its first 4 waves and now it is in its final leg up, which is wave 5. In this wave, we can see that the first 2 waves are completed and Nike is in its strongest wave, which is wave 3. Usually wave 3 is 361.8% of waves 1 and 2, giving us a price target of $255.30. At this point, I expect a retracement or a pullback of approximately 38.6%, bringing the price down to $193.12. After this retracement is over, I expect the stock price to increase in wave 5, taking the stock price to $293.06, which means a profit of 78% from the current stock price of Nike. You can expect this price target to hit in the next 4 to 6 years. Now let's summarize. The current stock price is an excellent buy zone. It is an excellent entry point for long-term view. I do not think that the stock is overvalued. In the long term, my price target for Nike is $293.06, which means if you buy the stock today, you can expect a 78% profit. The icing on the cake is that Nike pays $1.10 per year as dividend. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.